personal finance, investing strategies, and financial literacy education. Personal finance is a journey that everyone struggles with. Nobody is an island in terms of money and personal finance. Knowing the personal finance ideas in this video will help you with numerous aspects of your finances, such as budgeting, saving, investing, and much more. Hello everyone, and welcome to a brand new video on the channel. Today, we are going to talk about personal finance, investing strategies, and financial literacy education. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 1. Keep your expenditures lower than your earnings. Many of us are concerned about how much we earn, but the actual challenge is balancing our costs. Most people live paycheck to paycheck and have no savings. When you spend less than you earn, you are at liberty and on the path to financial independence. One of the best personal financial ideas you can follow is to keep your expenses under control. Number 2. Learn to budget. Budgeting is just setting a plan for your money so that you know how much and how you will spend it each month. Use the popular and practical budgeting method of allocating 50% of your income to essentials, 20% to savings, and 30% to luxuries. Number 3. Establish a breakdown of your earnings and expenses. You must understand the breakdown of your profits and spending and divide it into daily amounts. If you earn $3,000 per month, $100 per day, and you pay $2,500 in costs, you will have approximately $16 to spend each day. This can make it easier to restrict your expenditures because you have a precise threshold calculated. Number 4. Set financial goals. Setting financial objectives can have a life-changing impact. Your goals will provide you with a target to aim for, and as you stick to it, your money will improve. If you want to buy a house, a car, or paid off debt, set a goal and work towards it. You will achieve your goal someday. Number 5. A credit card is not free money. Only use a credit card if you can repay it. Otherwise, the interest will eat you up. Credit cards are not free money. Instead, they require monthly repayment. If used correctly, you can improve your credit score and even obtain lower interest rates for long-term investing. You should monitor your credit score and credit report on a regular basis with a free tool like Credit Repair, so you know when to stop using it. Budgeting advice and investing strategies. Create a financial calendar. If you don't trust yourself to remember to pay your quarterly taxes or pull your credit report on a regular basis, consider scheduling appointment reminders for these crucial financial tasks, just as you would for an annual doctor's visit or auto tune-up. Track your net worth. Your net worth, the gap between your assets and debt, is the big picture figure that can tell you where you are financially. Keep an eye on it, and it can help you stay on track with your financial goals or warn you if you're falling behind. Make bite-sized money goals. One study found that the further away a goal appears and the less certain we are about when it will occur, the more likely we are to give up. So in addition to focusing on big goals, such as purchasing a home, attempt to make smaller, short-term goals along the road that can yield faster results. For example, saving money each week in order to take a trip in 6 months. Now we will discuss the final point, which is financial literacy. Financial literacy is the capacity to understand and use a wide range of financial abilities, such as personal financial management, budgeting, and investing. It also entails understanding certain financial ideas and concepts, such as the time value of money, compound interest, debt management, and financial planning. Achieving financial literacy can help people avoid making poor financial choices. It can help people become self-sufficient and financially secure. Learn how to construct a budget, track spending, pay off debt, and plan for retirement. The value of financial literacy. In its National Financial Capability Study, the Financial Industry Regulatory Authority, FINRA, discovered that Americans with higher levels of financial literacy were more likely to make ends meet, spend less of their income, establish a 3-month emergency fund, and open a retirement account than those with lower levels of financial literacy. Today, few employees receive pensions. Instead, they are given the choice of joining a 401k plan. This includes decisions that employees must make concerning contribution levels and investment options. Those without job choices must actively seek out and open individual retirement accounts, IRAs, and other tax-advantaged retirement arrangements. It covers themes such as banking, budgeting, debt and credit management, and investment. Let's look at the fundamentals to get you started. A bank account is usually the first financial account you'll open. Bank accounts can help you save for important expenditures and life events. Online versus brick-and-mortar banks. When you think of a bank, you probably envision a building. This is known as a brick-and-mortar bank. Many traditional banks also allow you to open accounts and manage your finances online. Some banks only operate online and have no physical locations. These banks often provide the same services as brick-and-mortar banks, with the exception of the option to visit in person. What type of bank can I use? Retail banks. This is the most prevalent sort of bank with which people have accounts. Retail banks are for-profit institutions that provide checking and savings accounts, loans, credit cards, and insurance. Retail banks might have real, in-person locations or be exclusively online. Most provide both options. Banks typically have more facilities and ATMs around the country than credit unions, and their internet technology is more advanced. Credit unions. Credit unions, like banks, offer savings and checking accounts, loans, and other financial goods. They are, however, not-for-profit organizations with members as owners. Credit unions typically charge lower fees and offer greater interest rates on savings accounts and loans. Credit unions are sometimes known for offering more personalized client care while having significantly fewer branches and ATMs. The ordinary person may desire to open one of three types of bank accounts. Savings accounts. A savings account is an interest-bearing deposit account held by a bank or other financial organization. Savings accounts normally yield a low interest rate, but their safety and dependability make them an attractive option for storing available funds for short-term requirements. They normally have some legal restrictions on how frequently you can withdraw funds. They are, however, often quite flexible, making them excellent for creating an emergency fund, saving for a short-term objective, such as buying a car or going on vacation, or simply putting excess cash in your checking account. Checking account. A checking account is a deposit account at a bank or other financial institution where you can make deposits and withdrawals. Checking accounts are relatively liquid, which means they allow for many withdrawals per month, as opposed to less liquid savings or investment accounts. Yet they earn little or no income. Money can be deposited in banks and ATMs, by direct deposit, or another sort of electronic transmission. Account holders can withdraw money from banks and ATMs, write checks, or use debit cards associated with their accounts. High-yielding savings account. A high-yield savings account typically provides a substantially greater interest rate than a conventional savings account. The trade-off for generating more interest on your money is that high-yield accounts typically require greater initial deposits, minimum balances, and higher fees. That's the end of the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.